these two indicators, when put together, really form a great tool for identifying, places where markets are starting to get too stretched to the upside or too stretched to the downside, and they start getting what we call either maybe buying exhaustion on the upside, which leads to a cycle reversal down, or selling exhaustion to the downside, which leads to a bear to bull reversal. So you can see here, just for example, the market sold off pretty hard. This is in the S&P, and then you get what we call, exhaustion. So you can see it came down here. This is a long-term chart, and it got down here to this area. You start losing sellers, selling exhaustion, and you get what we call a cycle reversal by this indicator here, where it crosses this moving average part of the indicator. All right, and the market, you can see, reverses up. So it got stretched to the downside. These are my extreme range bands that show you how far the markets get stretched, either 1 to 2 to 3 ATR. And so when they start getting that kind of stretched out area, that's where we start we're careful about the market. And then we get these extremely overbought, where the moving average of this reversal indicator comes into overbought, and it crosses. That's when we get a pullback. Now we're not there yet, so we still have potential to just keep grinding up. So here's that indicator now. You can see, kind of get an idea of what we are doing now using the same time frame. So here's the weekly of the S&P 500, the one I just showed you, and we're not even close to being at extremes here on the weekly. All right, so here's the weekly. This is 2 ATR, that's 3. We're not even close to it. Now we are just overbought on the indicator itself, but not on the moving average. Okay, so look at the difference. Here we are currently, and here it was back in this example back here. So up here, it got over that 2 ATR and look down below. You can see how stretched it was, and then it crossed the moving average, and then we had the pullback. All right, same here. Got way stretched, got way overbought. We had the pullback. Same here. See the same thing. Now, currently, just one last picture. We're not even there. We're not even close. All right. Now that doesn't mean that we can't crash and burn tomorrow, but just looking at these technicals, there's still, what I'm trying to point out, there's still potential to grind higher. Okay. Now on the daily time frame, that's where we are getting a little stretched. So you could get a short term, a little bit more intermediate, medium term pullback. Okay. So this is where we can then kind of work the cycles. So we're starting to get a little bit more overstretched here. See the indicator down below. So once we get that 14-period moving average right here, see how it goes sideways? Look at this. Let me pull this up. Come on. There we go. All right, so see, this is over 90 percentile overbought. This is the indicator in white. So it's overbought, but the key that I like to look at is this is the 14-period moving average of that indicator. Now, when it starts to get really overbought, that part of the indicator, that's when I really look for the markets to potentially start getting exhausted. So you can see this example here, right here, it was at the 3 ATR on the daily, and you had it super overbought. And finally, we get a pullback, not a big one, but a pullback to the 21. That's your kind of mean reversion. And then we've been just grinding up. See how we've been just grinding?